First things first, what is trading psychology? So basically, trading psychology is how you feel about and respond to trading. The main aspects are firstly, emotion, patience, staying calm, and making good decisions. So we'll get right into that in depth right now, but these are the main aspects when it comes to trading psychology. When someone tells you how strong is your trading psychology, these are the four basic pillars of trading psychology. These are what actually make a good trader, or what actually destroys a good trader. Whether your strategy is good or not, at the end of the day, it begins with the psychology of trading. You must be very strong in this aspect, and if you aren't, there are ways to tackle that, and this is what we're basically looking into. First things first, we have trading emotions. So you've heard this a lot, that all of a sudden someone is telling you, if your emotions are taking over with your trading plan, then basically that's just going to run you down. That's going to make sure that you do not prosper as a great trader. So what actually is trading emotions? So the first aspect is fear. Some traders fear entering certain good trades because they don't have much confidence. What I believe is that trading emotions actually depends on your confidence and your discipline in terms of trading. Aspects such as fear. You might fear to get into a good trade, even though everything is signaling you to get into a good trade, but all of a sudden you are scared to enter that trade, and next thing you know, you see that trade is actually going, if you would have entered it, that trade is going within your favor, but all of a sudden you enter that and suddenly it's falling instead. That is basically you trading on fear. And then greed as well. This is why you need a trading plan. After you hit your target, you're starting to think that, oh no, the market is going within my favor, I'm on a roll, and you start over trading, and that causes you to lose instead of keeping that profit that you hit your target with already, causing you to end up either in a loss or just ending up with a wasted day because you've now lost the same amount as you've won. So that's another aspect, greed. Please don't be greedy on the market. Stick to your trading plan and be disciplined about it. If you hit let's say for example, your trading plan says maximum of 3 trades per day, and let's say unfortunately for you, those 3 trades did not go within your favor. Don't be greedy about it. Be disciplined. Stick to your trading plan. It's for the next day. There's always another day. There's always another time. And stress. Dealing with stress when trading. So let's say you are having issues, whether it be health issues or family issues or relationship issues, whatever the issue, and it's causing you stress. Stay away from the markets. I recommend you to stay away from the markets. This financial market can actually give you stress. You might actually want to trade because you've lost a certain amount and you want to get back at the market. Don't do that. Stick to your trading plan. That's the reason why we all have a trading plan. Stick to your trading plan. When you stick to your trading plan, things go well. But sometimes when stress gets in the way, it's best to avoid the market. Just don't trade. It's that simple. If you just don't trade, it makes things way easier. Instead of you losing a lot of times, you can actually, sometimes the best thing to do is to just do nothing. Just stay away from the market. Trading with stress is the worst thing anyone can do, because you might actually end up losing your risk management and losing all sorts of rules that you have set for yourself, because your judgment will be clouded. And trading with joy. I'm sure everyone, when first getting into trading, thought that trading is very easy, it's very simple to do, and you can make a lot of money within a short period of time. That's basically the first thing someone does. Trade with joy. This is just being optimistic about your results and what you expect. You might even be planning on spending the money that you have not even made yet. Well, that's just trading with joy. That's being optimistic. Not to say you shouldn't be optimistic, but it is better to actually set realistic goals and be realistic about things and approach things at a more realistic approach to the market and trading. Because if you trade with joy, you will be disappointed and you will end up in either one of three of these emotion factors, such as fear, greed, or stress. After trading with joy, you might all of a sudden, one little trade that doesn't go your way seems to disappoint you. And once you have disappointment in you, already emotions are starting to kick in. Now you're either scared about a certain instrument that you are now trading, or you're now greedy because you want to get back the money that you would have got, or now you have stress because you've lost some money. Just try and control yourself. Try and be in touch with your emotion. Try and just stick to your, not to say you should be a robot, but just try your best to control yourself at the end of the day. And trading with anger goes hand in hand with greed, because anger, when all of a sudden you've lost, let's say, the 3 trades, and you're just like, no, I can't go out now on a deficit. So you decide to get back in the market and continue trading in anger because you're feeling like the market has stolen your money. Don't do that. Stick to your trading plan. I don't know how many times I have to stress this, but it must get in you. Stick to your trading plan. It's either you must revisit your trading strategy or you must just revisit your emotions. Don't trade with anger. If you trade with anger, things will not go your way. Don't try and get back at the market or blame anyone. Rather, make a strategy where you're so confident in it that you will be okay. Even if you have the bad times to come, you will still be okay because you feel confident with your strategy. You feel confident with your trading plan. That's it. At Trader Keys, we just try and be honest with you and try and get you not too overjoyed, because that leads to disappointment and that just leads to a train wreck. So honesty and transparency is quite key here. Don't trade with anger, trying to get back at the market feeling that no, you're behind. You're not behind. Everyone has their time. Everyone has those moments. Don't let anyone lie to you and say that they're a trader, they've never lost one. If they haven't, maybe good for them, but most traders, realistically, in the long run, you will go through losses. But at the end of the day, as long as your trading strategy is producing a higher return than a loss, as long as you are in profit, and that's the end of the day. One more important aspect is sentimental trading. I'm sure we've all had a moment whereby we've traded an instrument and it's worked in our favor for us before, but then now suddenly so attached to that instrument. Let's say it's GBP USD. It's worked for us before. We've won 3 trades already and we're feeling this is our instrument. It works. We know it best and so forth. Don't ever feel attached to a currency pair or instrument, because at the end of the day, this is just the market. You might be lucky or it might be your time, but at the end of the day, don't trade sentimentally. Don't get too attached to these currency pairs or aspects of psychology. So we have patience. And after entering a trade, give it ample time for the market to react. Because sometimes you might enter a trade and then just cancel it immediately in a loss instead of seeing it out. See that trade out. If you've placed it, you've probably done your work. You've probably done your due diligence to see that it is a worthwhile trade. Otherwise, you would have never entered the trade. So see that trade out. Give it the ample time that it needs. You have to minimize your loss and maximize your profits. So if you can't achieve that, you feel you can't achieve that, and then you maximize your loss by just canceling every little trade doesn't go within your way within a certain time, you're going to maximize your losses and minimize your profits, because you might not even give your profit enough time to even reach its desired destination. And another aspect of patience is that don't chase the markets. Like when it's already moved, don't chase the market when it's already moved. That is a pure lack of discipline. Because let's say you anticipated the market to go up, and then now it's gone up in your favor if you would have entered that trade. But you didn't enter that trade, so you decide, let me enter it now. But now it is going down, so now you're in loss. Sometimes you might as well wait for the next clear signal to come. If you miss an opportunity, let it go. That's one thing I have to let you know. Let it go. So let's have patience. And then another aspect of trading psychology is staying calm. So when we say staying calm, right, you've created a trading plan and you have to abide by it. So you trade with sensible sizes. I recommend this, that you trade with sensible sizes and manage risk and your money. If you do that, it'll be way easier for you to stay calm, as we're saying, because if you trade with sensible sizes, you wouldn't worry too much about that trade. But if you trade with something that you can't really afford to lose, then obviously you won't stay calm and you would end up acting on emotions, and that's something we don't want you to do. So that's why we say use good risk and money management, because that's another aspect that helps with this. So to keep calm, you can find methods to do so, because in this financial market, things aren't very predictable as we think they are, or things don't go the way we expect them to go. And you have to find methods to stay calm. Just trust your trading strategy and your trading plan and abide by it. Simple as that. Just stay calm. Some people might be calmer than others, therefore they can handle emotions better. But you just find your way. That's why I say sometimes trading is actually quite individual. Something works for others, some things don't work for others. But you just find your way to stay calm, whether it be de-stressing in some sort of way, but at the end of the day, just stay calm and don't act on emotions. Prevent the emotions from acting. Alright, and we have one of the last but not least aspects, decision making. This is a very vital part of trading, because you need to be willing and ready to act, as your window of opportunity may be small. So follow the trading plan and manage risk well. If you decided on your trading plan that you're going to use a certain lot size, keep to that lot size. That's your decision. When you decided on that, that makes things easier. All you're doing is just entering a trade based on your due diligence of your trading strategy. So all of a sudden you see your buy signal goes off and it's according to your trading strategy. You've done your confirmation. Make that decision as you can, because as soon as you lose a few pips or so, that's already part of your profit gone. So you have to act pretty quick depending on the time frame you use or whichever strategy you're using as well. The decision making either way is a vital part. I recommend here just trusting your strategy, trusting what you're doing as well, trusting in following your trading plan. Manage your risk, manage your money. It'll make decision making way easier, especially when you follow your trading.